Hey, how you guys doing? First thing that I want to share with you guys, because right now we're gonna do types of policies, but on the Telegram chat that I have for life exam prep class, you're gonna notice something here. Check it out. On this Telegram, if you go to the pin messages, all right, you're gonna see the review class that is available from Jesus Mora. All right. Make sure you send him a text message of your information before he accepts you to be in his class. If you don't do that, he's not gonna accept you in. It's a private meeting, okay? I also want you to know that let's go click on the pin messages, right? Pin message, all the pin messages are important. Like this one takes you to a where is it at? To a file. Let me go back here. Move it out of the way. So let's see. Where is it at? It's not showing. Oh, it's over here. So if I click on it, it's going to open up the like life exam prep review class. This is updated as of June 2021, but it's pretty much the same thing. I mean, nothing from the test has changed, where it talks about different vocabulary words and key terms from the life insurance exam. That's a really cool tool that you should have with you at all times, even on paper. So when you're like, waiting at the DMV, waiting at, for somebody, waiting in your car, chilling in your car, instead of watching Netflix or instead of watching social media, you just pull it out and boom, you start studying that file. That's a really good one. Let me keep clicking on the links. Here's a huge library to study from. If you click here, it's going to take you to a page where it has a bunch of videos, all of them collectively put together for you. As you can see, there's a ton of them. If I scroll to the right, there's a ton of them here. And then it says get more videos here. You click on it and it takes you to even more YouTube videos where they're all kind of like labeled of what the video is all about. That's a great tool too. There's unlimited tools, guys. There's nothing that could stop you from passing this test unless you just kind of slack it and don't study the way you should, This one's I put, that you could schedule a meeting with me, but this is the main one that I wanted to share with you. This one, this page right here is obviously for California only, but like I said, every state is pretty much the same. A very, very small little difference. And today we're going to go to types of policies. That's the main one. I always like to go over types of policies because there's 10 questions on the test on types of policies. So that's what we're going to study right here. So here we go. Let's do it. All right, let me make it big for your eyes. Okay, so here we go. Types of policies. Which of the following is true? Now, check this out, guys. You want to study a bunch of quizzes. Why? Because this exam is a multiple choice exam. So if you take a bunch of multiple choice questions, then it's going to help you pass the test much easier because you're conditioning your brain to see multiple choice questions. If you just read or watch videos, that's good. But the test is multiple choice. So if you don't do a bunch of multiple choice questions over and over and over and over and over and over and over, the boring over and over, but the boring is going to pay you a lot of money because you're going to get your license, and this license pays me right now, as of January 2023, about $40,000 a month. So if you want to make big money, you want to get your license with this, then you can't get lazy, you can't slack it. Okay, you got to be okay with the boring. You got to be okay with doing it over and over and over until the job gets done. You do it and do it until the job gets done. You don't get bored when you have a goal, when you have a why, when you have a purpose. You don't get bored, all right? You just do it and say, hey, you know what? I guess this is what it takes. Let's get it done. Let's just get it out of the way. And the good thing is that you don't have to take it more than once. Once you pass it, well, if you pass it, right? You don't have to take it more than once if you pass it the first try. Once you pass it, you don't ever have to take this test ever again. Now, after this, you just have to renew your license, depending on your state. In California, in most states, is 2 years. Okay, so you just renew it every 2 years. Just pay a $200 fee to keep your license active. That's money that the government wants to take from you. Hey, that's on the government. It's not Primerica. It's not your insurance company. But the government just likes to kind of like just take money from you, right? Every 2 years, $200. But it's okay. I mean, if it's gonna pay you, it's an investment, right? To do business in your state so that you could get paid 40,000 a month or more. It's worth it, okay, guys? So make sure that you do that. Also, when you take the test, since it's multiple choice and it's 75 to 100 questions, every state is different. California, again, it's 75 questions to 80 questions. Then if you don't take a bunch of multiple choice questions, this is what's going to happen. You're going to start getting tired. By question number, let's say question number 30 or something like that, or question number 40, you're going to be like, oh man, I'm tired. And then you're going to be fatigued. Therefore, you're going to start forgetting stuff. And that's not going to help you in terms of, increasing your ratio of passing the test. Make sense? You want to increase your ratio of passing the test. You want to be conditioned. Like if you're running a marathon, that's, I believe that's 12.5 miles. Well, guess what? That's a lot of miles. And you don't want to get tired on mile number 3. And then you say, nah, you know what? Forget it. Marathon's too crazy. Well, it's because you didn't practice. You didn't condition your body for the marathon. Make sense? All right. So let's keep going here, man. Let's get you guys to study here. Which of the following is true regarding the insurance amount in a credit life insurance? Which of the following is true regarding the insurance amount in a credit life insurance? Allowable amount coverage is determined by the state of California commissioner? No, the amount is determined by the amount of money you borrowed. So A is wrong. B, the amount of coverage can be greater than the amount owed? Nope, you could only get coverage to the amount that is owed, the amount that you borrowed. 3, the creditor can only insure the debtor for the amount owed? Yes, that's what I've been saying for A and B. D, the creditor may insure the debtor for an unlimited amount of coverage? No, only for the amount owed. So the answer is D, right? Credit life insurance, what is it? It's a type of insurance that you have to get if the bank creditor, right, credit card company or somebody that lends you money says you should get a life insurance policy because if you die, who's going to pay me my debt? Let's say you want to borrow $20,000 from somebody. They say, okay, I'll lend it to you. You have good credit, you have a good job, you have good income. I'll lend it to you, but I want you to get a life insurance policy for $20,000 because if you die, I want my money back. I want to be the beneficiary. You're going to pay for the premiums, but I'm going to be the beneficiary of your life insurance policy. That's called credit life. Hey, if I'm talking too fast, just since I'm putting this on YouTube, just pause it. Okay, rewind it, listen to it over. I was super clear. I was just a little fast. Okay, but just rewind it and replay what I just said, and it'll make sense. Okay. Which of the following policies would have an IRS required corridor or gap between the cash value and the death benefit? Equity index, universal life, or universal life? I believe it's A, option A. Okay, let's read this because the corridor, IRS corridor or gap. Okay, this is a little tricky, a little confusing. Okay, so let's read the rationale. Universal life, option A, which is a level death benefit. Level death benefit means that you only get the death benefit, you only get the coverage, you don't get the savings, the cash value. You lose the cash value on level death benefit. Universal life works like that on option A. Whole life works always. Okay, you lose your cash value if you die. Policy must maintain a special corridor or gap between the cash value and the death benefit as required by the IRS. If the corridor is not maintained, the policy is no longer defined as a life insurance for tax purposes and consequently loses most of the tax advantages that has been associated with the life insurance policy. Okay. I know it's Chinese, it's a little confusing, but just know this, okay? Just keep it super simple. Whenever you hear the word IRS corridor or IRS gap, just think of option A right here. Okay. That's going to keep it simple for you. All right. Just don't complicate it. Option B is not a level death benefit, is an increasing death benefit. You see that right here? Increasing death benefit. That means you get your cash value. If you die, not only do you get the cash value, but the face amount, you get both, but not on option A. An insured buys a 5-year level premium term policy, which with a face amount of $10,000. A policy also contains renewability and convertibility options. When an insured renews his policy in 5 years, what will happen to the premiums? A, it will remain the same for the next 5 years. No, the premiums are going to go up. Why? Because he's 5 years older, right? 5-year level term means that that it locks in your age for 5 years. But once the 5 years is over, then you have to pay more money because you're going to renew it at your older age, 5 years older age. Make sense? So A is wrong. B, it will decrease. No, it's not going to decrease. C, it will increase each during the next 5 years as the face amount increases each year. It doesn't go up because a face amount goes up, guys. It goes up because your age. All right. So C is wrong. D is the answer. D, let's read it. It will increase because the insured will be 5 years older than when the policy was originally purchased. Bam, there it is. You see that? Make sure that right now I'm going to press enter, but make sure that while you're watching this video, you pause after I put the answer if I'm not reading the rationale, because you want to pause it so that you could read the rationale. Right here, you got to read this, guys, right? This is how you start learning the concept, because the test is not going to give you these questions, right? They're not going to give you questions that I'm going over right now. The concept is going to be there, right? So it doesn't matter how they throw it at you if you understand the rationale, if you understand the reasoning, the concept. Okay, that's the thing. You got to master the concept. Give me 1 second. Okay. All right, next one. If a life insurance policy increases significantly in face amount, death benefit, when the insured reaches a specific age, what type of policy is this? Increases in it. This is a jumping juvenile. Okay. So when a policy goes up at a specific age, and by the way, that specific age is usually age 21, the coverage goes up. So it's like if I buy a policy for my daughter, right? The coverage is low because I don't need that much coverage for my daughter. I just need it in case she dies. I need to pay for the funeral. Make sense? So if she lives and she lives to age 21, then she's gonna need more coverage for her future. So I'm gonna get this policy because it's gonna go up when she turns 21. Okay, a specific age. All right. Hopefully you understand that. Which of the following types of insurance covers a whole family in a single contract? The whole family. This is gonna be a family policy, right? So keep it simple, common sense, right? Family policy covers the whole family in a single contract. Makes sense, right? An individual purchases a $100,000 joint life insurance policy on himself and his wife. 8 years later, he died in an automobile accident. How much will his wife receive from the policy? Well, joint life pays the first to die. Okay, so 8 years later, he died. How much will the wife receive from the policy? Well, she's going to receive $100,000 because it pays when the first one dies. In this case, the husband died, right? If it was a joint and survivor, then the answer would be nothing, right? The wife gets nothing right now because it doesn't pay yet. It pays until she dies. Variable whole life insurance is based on what type of premium? Fixed. Level fixed. The answer is D, level fixed. All right, so if it was variable universal life, then variable universal life is based on a flexible premium, because universal life is flexible premium adjustable life. Okay, I'm gonna repeat. Universal life is flexible premium adjustable life. All right. In modified life policies, what happens to the premium? Well, modified means that it gets modified to something higher. It starts low and then it just all of a sudden jumps. Okay, so it is higher during the first policy years? No. It varies in the beginning but levels off at the end? No. It is level in the beginning and increases after a few years. I like that one. It always remains level? No. So the answer is C here. Pause it, read the rationale, and then continue. Which of the following features of the index universal life policy features of the index universal life? So universal life is flexible premium, flexible premium adjustable life. Remember that. Flexible premium adjustable life. Anytime you see the word universal life, you got to start thinking right away flexible premium adjustable life. So A and B, flexible and adjustable. That takes them out, right? So now you're down to C and D. Policy cash value depends on the performance of the equity index. Yes. D, sell this product requires a securities license. No. You don't need a securities license to sell Index Universal Life. You only need a securities license on top of your life license if you're selling a product that has the word variable. Variable. I want that to stick to your head, man. I say it all the time. I sound like a broken record, okay? If it has the word variable, then you need a securities license because it's invested in the stock market because it varies, variable, securities license, variable securities license, variable. Pause it, screenshot it, read it. Next one. A father owns a life insurance policy on his 15-year-old daughter. The policy contains the optional payer benefit rider. If the father becomes disabled, what will happen to the life insurance premiums? So payer benefit rider is a rider that protects the policy from lapsing in case the father or the payer, it could be the mother too, okay? As long as they're the payer, becomes disabled. So look at what it says here. The insured will have the premiums for 6 months. We'll have to pay premiums for 6 months. And at the end of the period, the father is still disabled, the insured will refund the premiums. Yep. That's true, but let's see if there's another one that's more true. B, the insured's premiums will be waived to age 21. E, that's a better answer. B is the answer, actually. C, why is C not the answer? The premiums will be tax deductible until the 18th birthday. No, it's not tax deductible. It's just waiver a premium. D, science, it is science. Since it is the policy owners and not the insureds who have become disabled for the life insurance policy, thank you, babe. Policy will not be in effect. That's not true. Okay, screenshot it. Pause it, read the rationale, and let's go. The type of policy that can be changed from one that does not accumulate cash value to the one that does is A. The type of policy that can be changed from a one that does not accumulate cash value to one that does is called a convertible. Convertible term. Yeah, A. You could convert it from what? You convert it from a term policy to because term doesn't have cash value. Remember that? Term does not have cash value to something that does have cash value, which is a whole life, universal life, variable universal life, index universal life. So that's convertible. Okay. Converts into a whole different type of product. Still a life insurance policy, but it's a life insurance with a savings cash value. Okay. Permanent. It's called permanent too in the test. Term insurance, no cash value. The test is going to try to mess with you and convince you that term has cash value. It doesn't, okay? Next one. Which policy component decreases in decreasing term insurance? What decreases the face amount, okay? Decreasing term, face amount goes down. Premiums are leveled. The payment stays the same, but the coverage goes down. Decreasing term. I mean, when the term ends, the face amount is 0, by the way, on decreasing term. All right, we're done. Awesome. There's a lot of great content in this video. I went over more than what the question asked, so make sure you rewind this, watch it over and over. It's only, I believe it's a 10-minute video, 10 or 15-minute video, so watch it over and over, and it's going to help you pass this test. So remember, it's all about desire, man. Make it happen. Don't be just because it's 60 to 70% to pass, guys, don't take it easy, okay? Just cram it all in the last 2 days also. Just go all out in the last 2 days, okay? Because most of the stuff, you're not going to use it in real life, okay? Most of the stuff is just like kind of pointless stuff to learn. It's kind of like learning about pi, quadratic equations in school, because most of the stuff you learn here is not going to be useful in real life. So you want to cram it like crazy. The last days is going to be worth it because you're going to pass it, and then after that you could just flush it all out, right? Not all of it, but most of it. The stuff that you still need to learn, you're going to use it in business when you're in business. So, anyways, man, it's good to learn it because eventually you're going to be helping others pass their tests, and you want to at least know how to teach them. You passed it, not because, de panzazo, like because you got lucky, but because you wanted to learn it so you could help others, okay? Me, for example, I love helping getting people licensed because I get paid more money to do that. Okay. So what I did is I mastered it. I could take the test 1,000 times, pass it 1,000 times so that I could help you pass. Does that make sense? So be thinking even bigger than this. Don't just think, oh, I'm going to pass it just for me. Well, that's not enough motivation. If you pass it for the thousands that you're going to help pass in the future, then there's a lot of motivation for you to pass it now and study. Okay, there's a bigger picture. Passing this test is going to pay you eventually by helping others pass $50,000 to $100,000 in income per month. Why wouldn't you do it? I don't know why you wouldn't. Okay, but I'm doing it, so let's go. Let's do it every day. Let's study. Take care, guys. Bye bye.